let me skip. Okay. That's okay. All right. So, but now I want to come to the real techniques that I invited you for. So use the elbow. Use the elbow. It's fantastic. It's a great way to get into a trade that maybe you're late. Like you didn't get the initial breakout. It's already running. It's doing really well. It allows you to get into a position a bit late still, but with low risk, which is hard to do sometimes when a market's really running strongly. And then I'm going to give you key number 2, divergences. And this is my favorite way of using stochastics. There's not a better way as far as I can see. John says, ooh, ooh la la, can combine the elbow with the scooter report. Yes, you can, Sean. That's a very, very good idea. That's a very good idea. So this is trend following. And remember that the percent K and D, they're just simply moving averages of where the market is closing inside of the day's range. And as I mentioned right near the very beginning, I said, well, if we're closing in the upper half of the range, on average, that's probably a bull market, and vice versa. So what we see here is that this is the profit. This is a back test, the results of a back test of if you simply bought when the percent K went above 50 and sold when it went below 50. That's all the rules. Simple trend following. Buy when it crosses the 50% line and the weekly close is higher than last week's close. Here's the results of that back test. All lengths were profitable. The most profit was right in here, in this area here, around 30 to 50 lengths of weeks. This is a weekly chart. Monthly, all were profitable except short term. All were profitable except short term. Let's carry on. So here's the equity curve. If you did that technique that I just mentioned, buy when it breaks above 50 and a weekly close higher than the previous weeks, that's a nice looking equity curve. We had one drawdown up here at the very beginning. Looks like we lost about 10%. We went sideways for a year or two, and then we rallied strongly. These are all the statistics. It's boring.